Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, we just got the PPI data out. It came in better than expected again, meaning lower inflation. So this was a big question mark in my mind. We saw lower inflation than expected on the CPI data a couple days ago. The question in my mind was, were we seeing inflation on the producer side that would be then passed through to the consumer? Today, the answer is, as of now, that's not the case. Now, again, does that mean that there's a major lack of demand with consumers stopping to buy goods? And so these players are not able to raise prices? We'll have to watch and see what the data comes out with. But needless to say, lower inflation on the producer side and the consumer side means there's a little bit of a better chance the Fed will be able to cut rates at an earlier date. So again, we'll have to monitor that very closely. Now, the one warning sign here was retail sales. And let's go over this data right now. I'll throw it up on the bottom of my screen. You can see PPI data came in month over month at minus 0.5. So that's actually really interesting. Minus 0.5%. So actually deflation in this scenario versus an expected 0.2% increase. PPI year over year coming in at 2.4% versus the 2.5 expected. All right. So again, that was the PPI data. Now, retail sales. Retail sales month over month, 0.1% gain versus 0.0 expected. Now, you would say, oh, well, that's really good news. The consumer is doing better than we thought. But there's always a but, right? The key is look at core retail sales. Core retail sales is when you strip out automobiles. All right. When you strip out automobiles, the consumer retail sales minus 0.2, worse than the expected, plus 0.3. And the key here is that, remember, with all these auto tariffs, what that shows us is people quickly went out and bought cars. And that's why you got the regular retail sales numbers to be a little bit better. But if you strip that out and take out automobiles, they were actually quite a bit worse than expected at minus 0.2%. So what do we make from this? Basically, what we make from this is that the consumer is struggling and they are pulling back on spending to some extent. And that also could be contributing to why we're not seeing inflation yet in the system, both on the consumer and producer side. All right, so just wanted to go over that data here this morning. Let's flip over to our intraday charts. You can see that we were trading lower in the overnight. This is where we closed yesterday on the S&P futures right here. And generally, we traded down, really bottoming out around 5 in the morning Eastern time. We've then kind of climbed back out. And right here is where the PPI data hit, right? This is the 10-minute chart. This is the key pop on this move. And you can see it initially popped up quite a bit. Then it came in and we're basically still sitting slightly negative on the day. So just doing a quick trend line. This is where we closed yesterday, folks. So you can see we are trading lower currently on the S&P, but it's not a huge drop. It's about a 20-point drop on the S&P. Considering what we've rallied lately on the S&P, that is very, very minor. Now, flipping over to the daily chart, we know we are up into some resistance here. There's, again, this is kind of like, in all fairness, this is getting towards the last area of resistance before potentially testing the double top on the S&P here. So right now, again, this is still a big level that I'm watching right in this zone in here. And today, again, we're seeing a small down day, obviously very early in the day. We don't know where this will all pan out to. All right, so again, let's watch and see how the markets trade today. Yes, we are short-term overbought. There's no doubt about it. Anytime you see the S&P rally 22% in 5 weeks, that's impressive. The NASDAQ 28.5% in 5 weeks. Again, historically, that is very seldom that you will see those type of moves. Generally, it comes after periods like we saw in the COVID collapse of March 2020 when we rebounded, and kind of the same here. We had this very sharp collapse and we did rebound there. Now, one of the things I continue to monitor very closely is the 10-year yield. The 10-year yield yesterday, here you could see, was up again, getting up to about 4.454%, so over 4.5%. The PPI data today is bringing it in just a little bit. You can see, again, pulling back here on the PPI data here. And again, that is a positive, a small positive for the overall markets there to get a little bit of a cheaper move in money, or at least cheaper interest rate. And again, listen, we're still very elevated. And I think we have to be very aware of that, is that, like I said yesterday, from the low on May 1st to where we currently are, basically that's the equivalent of a 50 basis point rate hike by the Federal Reserve. And again, the concerning part about that is that we definitely have an economy that is slowing per the GDP, per the retail sales. It's good to see inflation a little bit lower, but the question again is, does the Fed believe it? And we're going to be watching here to see what goes on in the coming, days. What does Jerome Powell say? What do the rest of the Federal Reserve presidents say? Will they be willing to cut rates sooner versus waiting months to see where the economy goes? And ultimately, we still have to see where all these trade data goes, right? So keep in mind that, yes, last weekend, the Chinese and the U.S. reduced tariffs dramatically. U.S. still is putting a 30% tariff on pretty much everything out of China. But the question is, this was a delay for 90 days to see if a deal could be worked out. If we get in that final month or final couple weeks before that 90 days and there's no deal, that could be problematic. You'll start to see the markets get very, very nervous. All right. Back to the charts. We did have some earnings this morning and yesterday after hours. Some big stories out there. Cisco Systems reported earnings yesterday after the bell. The stock is trading slightly higher on the day, but not a major move, right? If we look at where it is, it closed yesterday around 61.30. It's trading around 63. So again, that's about a 3% move, give or take. And really, for me, the only level would be around 66.50, which would be a double top on the chart. So again, sure, there's some resistance in here. That's probably why the stock has stalled out right in here. But for the most part, for me to get a good trading opportunity where the probabilities and the risk reward match up, this high pivot here at around 65.5 would be a key level. Coreweave reported earnings yesterday after the bell. The stock initially rallied, then collapsed on how much money they're going to have to spend. I think it was $23 billion in spend to kind of keep up with the AI and everything going on there. And then this morning, we've seen Coreweave start to climb back up. What's interesting here is Coreweave closed yesterday right here at around 67.60. It's virtually trading exactly there today. So again, when a stock isn't really moving or basically flat on earnings or on any news, as a technical trader, there's nothing for me to do unless it starts to make a bigger move. Like if it were to rally up to this double top from yesterday after hours, yeah, I would consider at that point a day trade short, not a swing trade, just a day trade. And then vice versa, maybe double bottom down here. I'd have to reevaluate on that basis. Now, we did get news that Dick's Sporting Goods, and you can see Dick's Sporting Goods is down sharply this morning. They are buying Foot Locker out. That's why Foot Locker is up. Now, the thing with buyouts, and this is really, really important, guys, is that when a company gets bought out, there's usually a price tag, right? You hear like, oh, they're buying out this company for, $10 billion. And what that does is it essentially pegs the stock price within a very tight range of the buyout price. And so as a technical trader, you have to understand that in general, buyouts don't offer you day trading opportunities, even though the stock move in Foot Locker is massive. I mean, that's an amazing move in Foot Locker. But because there's a buyout price tag of like 10 billion or whatever it was, it's going to most likely go like this all day. Just chop sideways, 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 sideways. And so there's really not going to be the volatility. Now, Dick's Sporting Goods, maybe, but overall, same thing. It's dilutive to their shareholders, and therefore the stock is adjusting down based on the buyout price. So for the most part, I don't anticipate me trading Dick's or Foot Locker today unless something weird happens in the mix. All right, flipping back to the charts here, let's go on to our next one, UNH. Oh, UNH, problematic UNH. So UNH was already down, big gap down, and continues down. It is down again today. Take a look here, guys. After it was announced that the Department of Justice, the DOJ, is looking into whether or not they basically committed fraud, right? So again, we know with, charging and paying and, all these different things with medical stuff, was there fraud here? And so again, this is needless to say something pretty bad for the company. The only interesting thing is that look at where it's trading. I had put these lines on my chart literally weeks ago. Basically when it was up here, I was like, okay, well, if it comes down here, maybe I'd start thinking about it. Now I have to reevaluate based on the DOJ investigation, but on a technical basis, this would be a level to watch. I got to see where it opens though today and really watch that closely. But suffice it to say, this is a crazy move, guys. Absolutely crazy. From $600 now down to $285 in the pre-market. In fact, $283 in the pre-market at this point. That is quite the move to the downside. But again, if there's ever going to be a level of support, you have this longer term trend line and this flat line here. This would be an interesting area to start exploring a starter position. All right. So again, something to keep an eye on there. This morning, we had earnings from Alibaba. Alibaba dropping on earnings. Now, listen, Alibaba, look at the daily chart. Look at it. It's basically gone straight up from $95 to yesterday's close of $134. So that's basically a $40 move on a $95 stock. So basically almost over 40% move. So it really shouldn't be a shock to see it pulling back just a little bit on earnings after that rally to the upside. If we zoom out on the chart, needless to say, it's still beaten down because of all the woes for the Chinese economy and all the confrontational stuff between the US and China and all the regulations and kind of crackdowns that the Chinese government did. I mean, there's a lot of problems there. But again, pulling back just a little bit on earnings today. Next up, we go to Bitcoin. Bitcoin continues to do very little here, just kind of sideways chopping. Again, very similar to this, very similar to this. So right now you would say, okay, I would give the bias slightly to the upside as long as we don't start to really break down and fail the pattern. Now, what would be a failure of the pattern? Let's take a look at this. So essentially you have this area here, and then you bring it down to the low. So as long as we don't have a daily close below, I would say 100,700, then this pattern is just chopping sideways, right? That's very, very normal. Good example of this was on the S&P 500 here. If we looked at this, right? We looked at, remember this, guys? So the big green candle, multiple Wednesdays, basically a month ago plus some on that huge up day in the markets. And then remember, what did we have here? We had this, and then we took it down to the low of the retrace day. We tested it. We never closed below it. And what was the result? Eventually, we broke out, right? So if we extend this out, you can see it broke out, and we've continued up on the S&P. So again, going back to Bitcoin, I'm basically just using that same philosophy and saying, okay, as long as we stay within this zone and this zone with no daily close below this low, this retrace, your lowest retrace, then you can have, or you could say, this is bullish consolidation. If you get a close, let's say at 100,500, then that could be problematic. It could potentially be a failure of the bullish pattern. But right now, the bias would be slightly to the upside. Double top would be your target zone right there. Let's look at Ethereum as long as we're cruising through here. Ethereum had a great move up. I had this as along with Smart Money Crypto members. We took profits already, obviously. But the point being, again, great rally up. It's pulling back a little bit. This is my short level. Look at this beautiful trend line. If we rally up into this, I likely will be looking to short Ethereum at that price. Now, if it pulls back too much, then it's off the table. But let's just say we go here, and then in the next week, we rally up into that 2,900 zone, then I would be looking to short it. And again, that upsloping trend line. Remember, support, 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 support. All these are supports. Rallied up, went to basically a double top here from over here, then came in, hit, held, support, support, support all along here, finally broke down. This is called what? Retrace to the scene of the crime. Another great retrace to the scene of the crime. Look at the US dollar. The dollar here, again, look at this longer term trend line. Support, support. And then I showed you guys yesterday in the game plan, hits, goes up, breaks, retrace to the scene of the crime, pull back, right? And again, my guess is the dollar's going even lower than here. In fact, I think we'll take out this low and go down to, I think I said yesterday about 90, what did I say, 94, I think 94 and change, something like that is where I generally would expect the dollar to go back to. So basically, notice again, what I'm doing is I'm not reinventing the wheel. I don't have crazy, weird technical signals all over my charts where you look at the chart. I mean, so many people out there that show their charts. It's like, I look at it and even I'm confused. I'm like, wait, what the heck are all those lines and all this crazy whippiness and, these different signals? I don't use it. I don't think you have to. Simple is almost better in the market. when you cloud your charts with too many signals, I personally think it gives you mixed signals. The purest, right? We always want the purest form of everything. The purest form is trend lines. Trend lines, maybe throwing fib in there just to see if it matches up with a trend line. But we have, gap fills, those different factors, essentially all the stuff I teach in the Winning Trader series. But the point being, again, is you don't have to overcomplicate it, in my opinion. And you guys can see the proofs in the pudding. Not every call I make is a right call, but I would say we can all agree that 70 to 80% of what I talk about in these game plans comes to fruition. And that's really good enough if you can do the odds and you manage your share size properly to make very, very good returns in the market, both in bull markets and in bear markets, mind you. So I think that's the cool thing about it. It's always universal. Trend line, support and resistance, bull markets, bear markets, chop markets, whatever it is, it's doable. All right. A couple other charts to go over here. Gold, let's take a look at that. If we take a look at gold, here's one of the good calls, right? So where did gold bottom out? Right in here. I said, guys, and by the way, this was even here, and then we rallied here, and I said, guys, I reshorted gold. Now, I got out right around here. In all fairness, I told you guys that because I just was like, you know what? Squeezing that last little juice out of the lemon, it's okay. I already booked a big profit there with members. But the point being is I said it's going likely down to here. Here it is, and it pierced the first line, almost kissed the second line. Two trend lines here. If we zoom this out, you can see upsloping line, flat line. That's dual trend line support. And what's gold doing? It's starting to rally back up. Now, again, the question is, does it rally up and go to new all-time highs? If you're asking me what I'm thinking gold's going to do, I think it's going to do this. And we could even move out the chart here. And then can I ask you guys a quiz question? What is that? So we already have this. So quiz. What's this pattern forming off of this up move? What would you guys call that? We call that a bull flag, right? A bullish consolidation. And so what does that imply if this is what happens? So I think a lot of people are going to be kind of confused by gold. You guys won't be because I'm telling you right now, but a lot of people will be confused by gold because it's going to go up and they're going to be like, oh, it's going to break out. And then it's going to come down. Oh, it's coming down. Up. Oh my goodness, it's breaking out. And really what it's going to do is just chop and digest because it's had such an impressive move up. But then eventually down the line, I do think it breaks out. I do. All right. So again, just hopefully you guys, some of you guys, I love giving you guys these little quizzes in between to see how your knowledge is progressing. But at least for me, that's kind of what I'm eyeing here on the chart. Now let's go to silver, because remember, silver is bullish. It just hasn't been able to break out. And today it's still not doing it. It's basically flat on the day. But again, this is not a horrible chart pattern on silver. You know, I definitely am not overly bullish on it, but I'm not at the same time, I'm not bearish. I'm slightly bullish on this chart. If it breaks here, that's your key. You want to see a break with confirmation on silver, and then it should make a move up. Take a look at oil today. Oil coming in. Dang it. The reason I say dang it is because I'm really trying to be patient to get it up here so I can actually short it. Obviously, it's coming back in. That's okay. By the way, what type of pattern is this on? Let's do a quiz. You guys look at the similarities. Imagine if it just goes like this. Boom. There you go. See how things repeat? I mean, like, we're not reinventing the wheel here in these game plans. Like, this is really basic analysis. Now, it does take an eye, and you have to practice, and you have to learn, and, you have to really start to trust the charts versus your emotion. Because, trust me, there's a lot of people that, when charts go up, they get very, very bullish when they should be getting bearish. It's our emotional nature to kind of do that. But really, in essence, this is probably creating a bearish consolidation, which, again, tells us probability favors the downside. All right, lastly, natural gas real quick here, guys. Nat gas, it did, again, we adjusted this trend line yesterday. You see it pull back. I didn't get a short off here. Looking back, I wish I had, but my line was up here just a little bit. But nonetheless, nat gas today is basically flat, but a nice 3-day down move on nat gas here on the chart. So let's flip back to the the S&P futures. You can see they're really not doing a whole lot. They did uptick on the back of the PPI data. I would just caveat that PPI data. Yes, it's good to see that inflation is not running away right now. It's not surging again for now. But the bigger question I have is that retail sales, core retail sales numbers, because again, you can explain the strong retail sales number because the tariffs that were going to be imposed on automobiles. Well, anyone that was thinking about buying a car probably ran out and bought a car, right? It's like, oh my gosh, I got to get in before these tariffs hit, and the car cost me 20% more. So that boosted retail sales. And then when you take that out to core, that's where things start to get a little tricky. And what does that tell us about the consumer? Now, granted, has the stock market rally up here? Maybe that's brought the consumer back to life. We'll see next month when the next data comes out, because it's been a tremendous move. Maybe the wealth effect is starting to play back into this market. So essentially a lot of unknowns, but I'm here to do my best to guide you guys based on charts, based on technicals and probability to what is most likely to occur in markets, stocks, crypto, commodities, etc. That's what verified investing is all about. You're one place to go for basically technical analysis that doesn't have a narrative or a bias, right? No emotion, no BS, charts. You guys are awesome. Thanks so much, guys. As always, I seriously appreciate you guys tuning in and just supporting us here. We're kind of on an island by ourselves, as most other places are filled with emotional analyst upgrades and this and that. And, oh, it's going to be great and this. And it's just like, you know what? Just tell me what the chart tells me. What is the probability here? Give it to me straight. That's what we do. Have a good one, guys. Take care.